But let's invite the first management on the show. Sharda Cropchem has reported a mixed Q4. While the EBITDA and the margins took a hit, revenue rose both in the agrochem and the non-agrochemical segment. The company has maintained their FY24 margin growth guidance of 15 to 20%. RV Bubna, the chairman and managing director of Sharda Cropchem, now joins us on the show now. Thank you very much, sir, for joining in. First, if you could just tell us what is the outlook on the top line in both the key segments that you operate in for FY24?
Madam, we should be able to grow around 15 to 18%, the FY24.
Okay, and if you could provide some breakup in terms of geographies, Europe, LATAM, which ones would drive growth?
I think Europe is going to be the main driving force. This year we have achieved about 47%, and in 84 we expect contribution from Europe to go up to maybe about 48 to 50%.
Okay, so Europe will be the driving force in FY24. Sir, we spoke to United Phosphorus earlier on their numbers. They spoke about pricing pressure. They spoke about how inventories were higher and some of the buyers, as per Adama, were delaying purchases as well. What is happening globally in some of these geographies? Because you also function in the same ones. Is there some pressure that we're seeing and that is likely to continue?
There is small pressure in US, in the NAFTA region. The demands are getting less and the prices are falling down. But I think it's a temporary phase. It will pick up in the next 2-3 months.
But according to you, what has led to this, this pricing pressure and higher inventory?
I didn't understand your question.
What has led to the pricing pressure that we are seeing globally? Is it led by cooling inflation, and that's the reason why demand is lower for agrochemicals?
No, it is mainly because of the weather and partly about cooling inflation.
Okay. And so this pressure is only visible in NAFTA, or are you seeing it in other geographies as well?
No, mainly in NAFTA. Other geographies are doing fairly well.
Okay. But sir, LATAM for you also declined 24% on a year-on-year basis. What explains that?
See, there was a particular molecule which had a very big, exceptionally big demand last year. This year, the demand of that molecule has come down to the normal level. And that was also not giving it because of the volume. The margins were also limited. So we are not impacted very much by by lowering of the volume.
Okay. In your presentation, you say that you continue to identify generic molecules going off patent. A lot of them are going off patent, say in FY24 or FY25 as well. How big is that opportunity? Will you be putting out registration applications for these newer products? What is the capex looking like in that case?
Madam, this registration process is not a short process. It's a long-term process. So our applications are already on, and the registration is being pursued for the products which are going to go off patented.
How big is that market, off patent market right now? If you can give us a number there.
Madam, this growth that I'm talking about has taken into account this new registrations which we are expecting.
Okay, so what is the pipeline looking like? How many products have you applied for?
Madam, we have about 1,150 products which are in the pipeline globally in various countries, and our capex is going to be in the range of 400 to 450 crores in the coming year.
250 crores is the capex. Okay. Sir,
400 to 450.
Okay, got it. Sorry. 400 to 450 crore. So you have a twofold strategy. One is to grow your existing business in the existing markets, and the second one is enter new markets. Could you elaborate a bit more? Which are the new markets that you're entering, and what is the game plan to scale those markets?
See, madam, we are covering most of the market globally. Our sales are spreading to about 75 to 80 countries. But in each market, there's a scope for deeper penetration. And for that purpose, our new molecules, all the registrations that we are pursuing will help us to get deeper into these markets.
Okay. So how will these registration costs, because we had this conversation earlier, you said some registration costs are even higher than setting up a plant completely, right? Will that have some pressure on your margins? Will you be putting out higher cash there or funds there for this registration?
As I stated, we have been spending about 400 and odd crores in the last 2-3 years on the capex, and that will continue also in the coming year.
Got it. Take that point. Last question before we let you go, Mr. Bubna. The non-agrochemical segment is around 17% of your total revenues. Anytime do you plan any demerger of this segment from the main business?
No, not for the time being.
Not for the time being. Okay, all right. Thank you, Mr. Bubna, for joining us today and taking us through what the business outlook is and what the demand concerns or pricing pressure is in some of these geographies. The stock is high by 2%. We'll do one thing, slip into a short break and connect with Venkat Jasti, who's the chairman and CEO of Suven Life Sciences, to decode their Q4 numbers. Stay tuned for that.